In a shocking turn of events that's rattling Wall Street and Silicon Valley, Elon Musk's technological empire is showing unprecedented signs of vulnerability. Our coverage focuses on the dramatic unraveling of what many considered an unshakable business dynasty. Tesla, once the crown jewel of Musk's portfolio, has experienced a catastrophic decline, losing over half its market value and hemorrhaging nearly $800 billion in market capitalization. Yesterday, the company's stock plummeted 15.43%, followed by a 3.22% drop in after-hours trading, sending shockwaves through the investment community. This isn't your typical market correction. We're witnessing what analysts call a perfect storm of internal instability, fierce competition, and controversial political entanglements that are eroding public trust in the Tesla brand. SpaceX, another pillar of Musk's empire, faces battles with mounting technical setbacks and unprecedented competition in the space sector. Meanwhile, his social media platform X, formerly Twitter, is grappling with cyber attacks and a mass exodus of advertisers. How did the man who seemed to have the Midas touch lose his golden status? Our sources indicate that Musk's growing political activism has created a significant rift with his core customer base. The tech mogul, once celebrated as a visionary, has become an increasingly polarizing figure. Industry experts question whether this represents a temporary setback or signals the beginning of a more permanent decline for Musk's business empire. The situation bears similarities to other tech giants who've faced sudden reversals of fortune, but the scale here is unprecedented. For investors and industry watchers, this development raises serious questions about the future of electric vehicle manufacturing and space exploration. Stay tuned as we continue to monitor this situation and bring you expert analysis on what these changes mean for the future of technology and innovation. In a dramatic turn of events, Elon Musk's empire shows signs of strain as Tesla's market dominance erodes amid political controversies and operational challenges. Once the leader of the electric vehicle market, Tesla's grip has loosened, with U.S. market share dropping from 79% in 2020 to 54% in 2023. The decline is pronounced in European markets, particularly in Germany, where sales have plunged by 30%. Industry analysts attribute this to Musk's controversial political statements and social media activities, which have alienated customers and damaged brand loyalty. Adding to these woes, Musk's platform X recently suffered a cyber attack, causing widespread disruptions. His claims suggesting involvement from a northern Black Sea region were met with skepticism from cybersecurity experts, eroding his credibility. The platform's advertising revenue has taken a hit, with major corporations including Apple, Amazon, and McDonald's pulling their campaigns due to security concerns. This financial pressure impacts Musk's interconnected business ventures. The once confident tech mogul appears increasingly strained, struggling to maintain control over his enterprises. His hands-on management style, previously celebrated as innovative, is now criticized as a liability. Critics point to Musk's inability to delegate, leading to bottlenecks in decision-making across his companies. This management approach, combined with political entanglements, threatens the future of his business empire. Tesla's brand identity has shifted from a symbol of innovation to what many view as a divisive force. With investor confidence waning and stock values declining, questions arise about the sustainability of Musk's leadership and the future of his enterprises. Breaking news: Elon Musk's empire shows signs of strain as Tesla faces multiple crises. Tesla and CEO Elon Musk are facing unprecedented challenges that threaten the electric vehicle giant. Our investigation reveals problems that could spell trouble for the tech mogul. Tesla's internal operations show serious strain. Workers are vocal about unsafe conditions and long hours, with multiple lawsuits pending. A former employee described the situation as a pressure cooker ready to explode. Protests are erupting worldwide, targeting Tesla dealerships. The company's new Cybertruck has become a symbol of public outrage, with reports of vandalism. These protests stem from Musk's controversial political statements and perceived labor violations. The situation in China, Tesla's largest market, is particularly concerning. Recent data shows an 11.2% drop in domestic sales, while exports have fallen by 87%. Chinese authorities warn that Musk's political positions could jeopardize Tesla's future there. Competition is intensifying. Chinese manufacturer BYD is gaining ground, while Ford and GM are rolling out impressive electric vehicles. Rivian and Lucid Motors are making waves with technology that matches Tesla's offerings. Dr. James Morrison notes, the combination of labor issues, political backlash, and market competition creates a perfect storm that even Musk might not be able to navigate. Questions arise about whether Musk's leadership style, managing multiple companies while engaging in political controversies, is sustainable. His recent decisions have left many questioning his judgment and ability to guide Tesla through these times. A Wall Street analyst states, the market is losing patience. Musk needs to decide whether he wants to be a CEO or a political figure. Trying to be both is hurting Tesla's bottom line. This situation continues to develop, with implications for the future of electric vehicles and American technology leadership globally. Tesla faces significant challenges in the Chinese market that could reshape its future. New tariffs are impacting the electric vehicle sector, threatening Tesla's industry leadership position. The Model S and Model X, once symbols of luxury and innovation, risk becoming too expensive for Chinese consumers. Meanwhile, local competitors like BYD, NIO, and Nexpeng offer more affordable alternatives. The situation is complicated by economic and cultural factors. Chinese automakers, supported by government subsidies, now offer vehicles matching Tesla's technology at lower prices. This combination of competitive pricing and state support challenges Tesla's market dominance. The trend reflects growing nationalist sentiments in China, with consumers increasingly preferring domestic brands. Tesla's brand image of cutting-edge technology and environmental consciousness faces pressure as vehicles become unaffordable for China's middle class. The challenge goes beyond pricing. Local competitors are better aligned with Chinese consumer preferences and better positioned in the political landscape. Tesla must balance its premium positioning with market realities, dominated by cost-effective local alternatives. This market shift could influence how global brands navigate similar challenges in other emerging markets, where economic nationalism and government policy shape consumer behavior. Tesla's future success in China depends on adapting to these complex market dynamics while maintaining its core identity. The company's response will be crucial in one of the world's most important automotive markets. Tesla faces unprecedented challenges as global trade tensions reshape the automotive landscape, putting Elon Musk's electric vehicle empire at a critical crossroads. The company's situation in China, its largest overseas market, has become increasingly precarious due to mounting tariffs and shifting economic dynamics. Industry analysts warn that Tesla must either absorb rising tariff costs, squeezing their profit margins, or implement price increases that could alienate their core customer base. With raw material costs surging and demand showing weakness in other markets, either choice could spell trouble for Tesla's financial stability. The situation becomes more complex when considering Tesla's Shanghai Gigafactory, crucial to the company's global manufacturing strategy. This facility, once celebrated as a cornerstone of expansion, now faces serious challenges. If production costs continue to rise due to tariffs, the factory's efficiency could be severely compromised. Tesla's dilemma reflects a broader shift in global manufacturing, says automotive analyst James Morrison. The company's heavy reliance on Chinese production, once a strategic advantage, has become a potential liability. The ripple effects extend beyond Tesla, as other major automakers including Ford, General Motors, and Volkswagen watch closely. These companies, also heavily invested in Chinese manufacturing, could face similar challenges as trade relationships evolve. To maintain its market position, Tesla may need to consider relocating some production to regions with more favorable trade conditions. However, such a move would require extensive planning, substantial investment, and navigation through complex regulations. The company would also risk disrupting relationships with suppliers and customers in China. As political tensions continue to influence global trade patterns, Tesla's experience could serve as a cautionary tale for international manufacturers. The outcome could establish new precedents for how global companies approach manufacturing strategy in an increasingly complex business environment. In a dramatic shift for the global electric vehicle market, Tesla faces mounting challenges as Chinese tariffs threaten its position in what was once its most promising territory. The company's reliance on the Chinese market has transformed into a significant vulnerability that CEO Elon Musk may have underestimated. The automotive industry is witnessing a shift where dependence on a single market becomes increasingly risky. Tesla's experience could serve as a warning for other manufacturers, as Beijing's policies now favor domestic automakers. What makes this concerning is the change in China's stance toward Tesla. The once welcoming environment has evolved into a contentious battleground. This mirrors situations in other regions where geopolitical tensions have disrupted business relationships. The impact on Tesla's stock has been substantial, with shares experiencing volatility due to earnings reports and Musk's social media presence. The uncertainty surrounding Chinese tariffs could trigger more sell-offs, undermining investor confidence. For Tesla, maintaining strong stock performance is vital, as share prices influence market perception and capital-raising capabilities. If the company loses investor trust, it could face severe financial challenges. The situation intensifies as Chinese manufacturers, backed by government support and lower costs, gain ground. These companies could overtake Tesla in both market share and innovation, particularly domestically. Tesla's brand loyalty may erode as Chinese consumers favor local brands offering similar technology at better prices. The coming months will be crucial as Musk navigates these challenges. The situation parallels other market disruptions in various industries. Tesla's ability to adapt will likely determine its future and reshape the global electric vehicle industry. As pressure mounts, Musk must guide Tesla through this significant challenge. The outcome could redefine the company's position and test its business model's resilience. Good evening. I'm John Mitchell, with breaking news about Tesla's unprecedented challenges that could reshape the electric vehicle industry. Tesla, once the undisputed leader in electric vehicles, finds itself navigating through what experts are calling the perfect storm of market pressures. The company's future hangs in the balance as it faces challenges beyond simple competition. Our senior automotive analyst, David Cohen, explains, "What we're seeing isn't just another corporate hurdle. Tesla is fighting for survival in an environment that's fundamentally different from anything we've seen before. The combination of rising trade barriers, shifts in consumer behavior, and international tensions has created a situation where every decision becomes critical. The biggest test lies in China, where Tesla's market position is increasingly precarious. Recent trade policies and local competition have begun eroding the company's position. Industry experts suggest that Tesla's ability to maintain its foothold in China could determine whether it remains a global leader or becomes just another player in the EV space. Elon Musk's leadership is under scrutiny as he attempts to guide Tesla through these troubled waters. Sources close to the company indicate that strategic decisions are being weighed for both immediate impact and long-term geopolitical consequences. This isn't just about Tesla anymore, says market strategist Sarah Williams. The entire electric vehicle revolution hangs in the balance. If Tesla fails to adapt to these new market realities, it could slow down global EV adoption. However, if they successfully navigate these challenges, they could emerge stronger and better positioned to lead the industry into its next phase. The company's response will likely determine not just its own fate, but the future trajectory of sustainable transportation worldwide. As trade tensions escalate and market dynamics shift, Tesla's ability to adapt and innovate will be tested like never before.